whereas investing activities are related to non-current assets. Because you're either buying or selling non-current assets here. Operating activities are related to current assets and current liabilities, or the other way to look at it is it's related to the income statement. Because each of these items usually has something with the income statement that's related to it. For example, cash from customers is similar to sales. It's not the same because sales is revenue, right? And it's measured based on when you recognize revenue. Whereas cash from customers is the amount of money that you receive. Cash paid to suppliers is a lot like cost of goods sold. But again, it's the amount of money you paid to your suppliers, not cost of goods sold. Cash from interest and dividends is like interest income or dividend income. Other operating cash receipts is like other income, I guess. Cash paid to employees is like salary expense. Interest paid is interest expense. And other operating cash payments is probably like other expenses. So let's answer some questions about this now. On the statement of cash flows, a positive amount would indicate a cash inflow or outflow. Inflow, you knew that and I didn't even tell you. Whereas the negative amount indicates a cash outflow. Then, let's go through a couple of items. I'll say the item, you tell me if it's operating, investing, or financing. Receive cash from customers. Operating. Purchase PP&E. Investing. Pay employee wages. Issue common stock. Financing. Pay suppliers. Pay back long-term debt. Financing. Now, take a look. This is a summary information about Southwest Airlines. You see operating, investing, and financing activities here, and these are the totals for each area. For Southwest Airlines in 2011, the primary source of cash is what? Operating, investing, or financing? Operating, because that's positive and the other two are negative. And would you say that's good or bad? It's favorable. Why? It's a positive effect on cash, yeah. I need some caffeine. Do you want the company's operations to make money, cash flow, or to lose cash flow? Yeah, so you want that to be positive. No. So for an established company, the expected primary source of cash is going to be operating cash flows. And Southwest, would you consider that a young company or an established company based on what I told you? It's an established company. The purchase or sale of long-term assets is reported as investing activities, and Southwest has a cash inflow or outflow? Outflow. So is the company purchasing long-term assets or is it selling long-term assets on average? Yes, it looks like it's purchasing something here. And would you consider that favorable or unfavorable? Why would you consider that favorable?
It's a good thing to purchase more assets.
Yeah. It means they're growing, right? You would want to see a company that's buying more aircraft and it's growing in its business rather than a company that's selling off its aircraft because they can't use them. So that's considered favorable. Now, in some situations, you might say they have too much assets, in which case it makes sense to get rid of them. Borrowing funds, issuing stock, and paying dividends are reported as financing activities. During 2009, borrowing and repaying debt are the primary financing activities. During 2009, financing activities report a net cash inflow, indicating this company borrowed more long-term debt. During 2011, issuing and repurchasing common stock are the primary financing activities. During 2011, financing activities report a net cash inflow, indicating this company issued common stock or repurchased it. Repurchased common stock. So for operating activities, a net cash inflow, outflow, or what would you prefer? Inflow, outflow, or it depends? Inflow. Why? Established company should be earning cash flows from its operations. That's what we like to see. And I'll tell you what you really like to see. What you like to see is a situation where a company is profitable and it has positive cash flow. That is what we really like. So you want to see a company that's profitable with positive operating cash flows. You want to see both of those things. Believe it or not, you don't always have both. For investing activities, what would you prefer? Inflow, outflow, depends. Outflow, why?
Because you want to see that the company can use its assets and has the ability to grow.
Most of the time, you want to see the company's is buying assets so it can grow. Now, how about financing activities? What? You'd say depends. Other thoughts? Anybody else out there? It's not Friday yet, guys. So why would you might you want? Let's look at each side of it. Why might you want financing activities to be positive inflows?
If they're a new company, you might need to borrow money from investors and other outside resources, or you don't have the money to keep up, but you have a great idea, supposedly.
Yeah.
That you know you can.
So you want to see that they're raising capital, right?
Yes.
For a new company, you want to see that investors are investing money in the company. The company is borrowing money that's going to fund its investments and its operations eventually. On the other hand, when might you want to see an outflow?
They're paying back their banks, investors.
Yeah, a more mature company. Therefore, it depends.